Good morning, everyone, and thank you very much for joining me. This is the morning market review, and today is Friday, and it's the 27th of October. And my name is Russell Shaw. I'm a senior market specialist at FXCM. I just want to draw your attention to my email address, rshaw@fxcm.com. And if you'd like to correspond, send an email through to that address. I will reply. Sometimes it goes through to the spam folder. So if you're waiting for any emails from me, and you haven't received them, just check your spam folder. They should be there. Let's go ahead. Just bring up our disclaimers. I'll start off with the high risk investment warning. Hey, Howard. Good morning to you. Good morning, Raj. Pleasure to have you on the webinar. Thank you, everyone, for signing in today. It's highly appreciated. All right, let's just bring up our market commentaries disclaimer. Good morning, James. Pleasure to have you on the webinar as always. Okay, and our references, MarketScope 2.0 and TradingView.com. And we're going to start with TradingView as we usually do, and going to consider the real rate. I'm actually finding the movements in the real yield to be quite challenging just over the last 2 days. We've had a sharp movement up, and then yesterday we had a sharp movement down, and slightly today. But what just to show you just how higgledy it is if you just take a look at this candle, which is from 2 days ago, and you can look at yesterday's candle. Let's just combine these two candles into one. It's quite a neat trick just to get an idea of market sentiment. So take the high of the 2 days, which will be yesterday's high. We take the low of the 2 days, which would be the low from 2 days ago, and you just bring in the range. And the open, so the open is over here. Okay, that's where we open for the 2 days. Right, there's the open. Where did we close 2 days? We actually closed down here. Okay, what kind of a candle is this? This is an interesting candle to consider. It's kind of like a gravestone doji, isn't it? Let's just box it. Let's just box it like this. So we kind of get this gravestone doji over the last 2 days. What kind of a candle is a gravestone doji? It's really sort of a candle suggesting pressure to the downside. So it's almost suggesting that the pressure is to the downside. Well, I say almost is because we do have some blue for today, which is interesting. One would expect the pressure to continue to the downside. We don't quite have that at the moment. We've got the blue moving up. So yeah, exactly. It's sort of if you're thinking it in terms of the bull or bear, as Rose says, this is sort of bearish candle, right? You kind of expect it to push down. That's interesting. I'll tell you why it's interesting. It's interesting in terms of the news release for today. We are going to get the very important core PCE. So that's the preferred inflation reading for the Fed. We're getting that at 2:30 p.m. ZA, which is 1:30 p.m. UK. Okay, 2:30 p.m. ZA, 1:30 p.m. UK. By the way, the clocks are going to change over. I think it might even be this weekend. I'll just double check. So then instead of having an hour difference between the UK and ZA would have a 2-hour difference, but I think that's from next week. So just keep that in mind. All right. So if we've got this bearish candle here, let's just take a look at the US dollar. Just before we go to the US dollar, what we can do is also just draw a trend line on this RSI just to indicate that the momentum seems to be pushing to the downside. Again, just another comment before we go through to the US dollar. The key question here with the yields, and we've asked this question a number of times and we'll continue to ask it, is how high can yields go? My opinion, subject to change, is that I think we're pretty close to the high. I don't know if we're going to pull back so quickly. I think we might tend to go laterally, some sort of range bound. That's quite probable. But I'm not sure how much higher we can go. Let's take a look at the dollar, given the fact that if we combine these two candles, we actually get a bearish candle, as Raj points out. And let's just see with this bit of blue coming in how the dollar seems to be reacting this morning. Okay, so let's go ahead and bring up US dollar. Just bear with me, bringing it across. Okay, so let's zoom in here. Yeah. Okay, so it's not surprising then that we've got sort of pressure on the greenback yesterday. Let me combine candles on the screen as well. Bear with me while we do this exercise. I think it's going to be quite useful if we combine the dollar candle from 2 days ago with the dollar candle from yesterday. I think the combination here is going to be very interesting. So remember the way that we do that, we take the range for the 2 days. So let's bring in the range. So it will be the high from yesterday and the low from the day before. Just bring in a range. Okay. Now, where did we open? We opened the 2 days over here. All right. Where did we close? We closed over here. What kind of a candle is this? What kind of a candle is this? Let's just box it up to give it a candlestick feel to it. What kind of a candle is that? It's called a spinning top. It's called a spinning top. Exactly, indecision. So Howard's saying the spinning top, Raj saying indecision. Exactly. So there's some indecision that has come through on the US dollar. Very interesting. So we've kind of got this bearish candle on the real rate. We've got this indecision on the US dollar, just to give us an idea of the sentiment behind the markets over the 2 days. Today, I want to reiterate, we've got the all-important core PCE. If it comes out showing a tightness in inflation, I think that does shoot the real rates up. I think that shoots the dollar up. But I'm not sure we're going to get a tightness in the inflation number. I think we're going to get a potential softness in it. If we get a potential softness in it, I think we see the real rates come down, and I think we get the US dollar coming down. Now, I'm expecting a softer number. That doesn't mean we're going to get a softer number. I'm not sure what the number is going to be. So be ready for volatility. Okay, be ready for volatility if you're trading over the release of that. So a very interesting makeup in terms of the dollar. Now, as we just go back to the real rate. So you can see the real rate's got blue. Is it going to maintain or not? I think that's going to rely on the release of the PCE. But because the real rate is showing some sort of buoyancy, it's not surprising that the dollar is showing some sort of buoyancy to start the day. But I think trading is going to be tough. Why do I think trading is going to be tough? Because of that underlying uncertainty. We don't really have a conviction to the upside, and we don't really have a conviction to the downside yet. And that puts us in a very uncomfortable position as traders. And unfortunately, that's just the way it is. If we've got this uncertainty in the dollar instrument, let's just take a look and let's take a look at euro. Let's take a look at cable. Let's see if we can get some sort of idea of the sentiment there. Let's just bring those up. Just bear with me while the chart changes. Just seems to be jammed up a bit. Okay, here it comes. Okay, so just like we've got that gravestone doji on, so let's not get confused. I'm talking about the gravestone doji on the dollar yesterday. We've got the dragonfly doji on the euro. That kind of makes sense, okay? But let's just bring in the range of 2 days ago compared with yesterday. Okay, this is interesting. The open slightly more to the upside here. So perhaps a slightly more bullish candle here. I'm going to just, there we go. Let's just see. So we kind of got this for the euro. Again, perhaps a spinning top. What I do note is that we do have a stronger tail on the downside, perhaps suggesting some sort of upside strength. Perhaps, again, difficult to tell. It is, at the end of the day, a candle of uncertainty. But if we do have this bias to the downside in real rate, then I don't think a bias to the upside on euro is impossible. I think it's quite probable, in fact. So, and then if we just take a look, how's the candle that we started off the day? What kind of candle is today's candle? Well, again, it's a very short spinning top. So we're taking a look at the how the euro has traded for today's trading session so far. I mean, we've still got until close of New York, at 5 o'clock New York, but it's a very short, uncertain candle as well. So I think markets just steadying themselves for this core PCE print. Again, I want to suggest, I can't say this with certainty, I think that the inflation number is going to come in suggesting some sort of control, and I think we might get the push down in the real rate. Let's just do the same exercise here with cable. All right, so we're going to take this candle and this candle, combine them. It does look slightly bullish, maybe. Let's just see. Just draw it down. Okay, where's the open? Open's over here. Where's the close? The close is sort of over here. So again, I would suggest that there is a support, a candle of uncertainty, but certainly with a bullish bias to it. Why do I say a bullish bias? The lower shadow is longer, so it's really that's more of an indictment on the bears. So when I say an indictment, the bears really lost more than the bulls. So potentially, again, some sort of pressure to the upside. I just want to hold there. I want to stop there because I feel we've dealt with some fairly complex analysis this morning. Is everybody with me? Does everyone sort of agree with what we've represented on the screen? Is anybody lost here? Which Rash saying RSI? Okay, cool. It's pointing upwards. Yeah. Look, the idea here is so let me just break it down. I think that there is a large amount of uncertainty over the last 2 days. I think that is where we are right now at the start of today. And I think that the market is turning to the core PCE for a catalyst for direction. And I think that the uncertainty does seem to have a slight bias to a potential weakening in the dollar, a potential strengthening in euro and pound. Again, I'm going to tag on subject to correction. Okay. No, we're not using open and open, James. We're using open to close. So we're trying to get the 4 points. Take the high for the 4 days, take the low for the 4 days. The open must be on day 1, the close must be on day 2. So all four points that a normal candlestick would use. Okay, so not open to open, open to close. Okay, all right. Another interesting one. Let's just go through to gold. I want to take a look at oil again, just to see how close we are to closing, to having that lower peak on oil. Let's go to gold first. Okay, so this is the gold chart. By and large, I mean, just sort of a broad view of it, you can see it's in zone 1, it's looking bullish. Let's just get rid of the ellipses here. Let's just do the same exercise. Let's be consistent here. And what we're going to do is we're going to combine this candle with this candle. So I just want to show you guys how I'm doing it. I'm taking the low for day 1, I'm taking the high for day 2. Okay, it's quite, there's not much range over the last 2 days. So there's not, just over the last 2 days, not much excitement in the gold market. But then what we do, take the open, James, open of day 1. Okay. Take the close of day 2. And basically, unfortunately, my open and close are not particularly straight, but we're getting something like this. What candle is that? A very short spitting top. Again, there seems to be an element of uncertainty, and that's how we're starting today. If you take a look at today's candle on gold, what do we have? We have an exceptionally short body. Okay, exceptionally short body. No real shadows. No real shadows. It's an uncertain. We're starting the day uncertain. Okay, that's not such a cool place to be in as traders. We really want to be in a place where there is upside volatility or downside volatility, and try and take try to take advantage of that if we can. I don't think we're starting the day with that benefit. We're starting the day with a lot of uncertainty. So today seems to be a tricky day just to start. All right, let's just take a look at oil. I'm just bringing up Brent UK Oil. Okay, so we're just sitting in zone. We're sitting in zone 2, neutral. What kind of a sentiment do we have? Take the range of day 1 and day 2. Day 2's close very, day 2's high is very close to day 1's high. It's a little higher. Got that. Here's the open. Here's the close. This is, it's almost like a doji, isn't it? It's almost like a doji. So even oil, we can see it's in zone 2, which is neutral. Well, we've got that uncertainty behind it. What's interesting, if we just go through to the weekly chart here, if we close down, we get that lower peak. When I say when we close down, if we close below last week's low, we get the lower peak. If we don't close below it, we don't get the lower peak. So that's why I've got LP question mark. James saying volatility promises both considerable gains and losses. Of course, if you're on the right side of the volatility, you're kind of counting your blessings, and if you're on the wrong side of volatility, you're very sorry for yourself, aren't you, James? So, but that is the case. There's no two ways about it. But as traders, we need volatility. As traders, we need volatility. So we trade the volatility. It's just, are we on the right side or we're on the wrong side of the volatility? All right. Very last chart for today. Let's take a look at DAX just to see. Now the DAX has been open for about 3 minutes, just to see what's happening on the DAX side of things. Just bear with me while it downloads. All right, so you can see that when we combine the two candles here, it's poor. So you take the high and the low. Where's the open? Open's pretty close to the high. Where's the close? Close is pretty close to the low. So we've actually got quite a bearish reading on DAX over the last 2 days. This actually can actually make this red. We actually got a candle like that. So over the last 2 days, really DAX not showing any bullishness. It's really bearish. If it's bearish and we've got some blue here, well, I would be very, very cautious around the R1 resistance area. That R1 resistance area looks quite menacing, and I think if we get a crossover in the EMAs to the downside, and if we get a crossover to the downside with the stochastic, DAX may have a rough day. ECB did hold rates, but I'm not sure that was a key driver of the market, Raj. I think that the general higher yields are acting on risk markets, and I don't think earnings season, and I'm talking US earnings, but really US earnings seasons are going to affect global markets, and I think that the earnings haven't been particularly good. Like Google's earnings weren't great, Tesla's earnings weren't great. A few others haven't been great. So I think there has been some pressure on the risk markets, and I think that's sort of what we're seeing reflected here. The ECB holding rates certainly, I think, has an effect, but I did take a look at the euro yesterday, and the movement in the euro wasn't particularly strong. I think that by and large, we keep to sort of the way we're looking at it, generally using real rate as a proxy for sort of global rate environment, and seeing if we can get some sort of correlations there. All right, I think that's as far as we go this morning. Are there any questions, guys? Just go ahead and type those in. All right, let's wrap up here. Thank you very much for joining me today. Have a phenomenal weekend. Catch you guys on Monday. Thanks, guys. Cheers.